Hello, hi, this is Ravinder Boda, student of Indian Institute of Management, Tiruchirappalli, batch of 2017-19. As a part of our course, Indian Economic Policy, we are supposed to do a video on any of the issues that India has been facing. So, I will be discussing on certain topic of financial inclusion and financial literacy. Since Indian government is moving to a direct benefit transfer from the public distribution system, it shall be a setback if it is not fulfilling the criteria of financial inclusion and financial literacy. The need for financial inclusion has been widely recognized all over the globe. It is also been observed all over the world that cashless economy is the need of this hour. Financial literacy in India has consistently been poor compared to the rest of the world. Financial literacy puts a burden on the nation in the form of higher cost of financial security and lesser prosperity. An example of this is the fact that most people resort to investing more in physical assets and short-term instruments, which conflicts with the greater need for long-term investments, both for households to meet their life stage goals and for meeting the country's capital requirements for infrastructure. In India, there are also certain erroneous beliefs associated with financial literacy. The most common being the myth that one who is literate or rich is also financially literate. Lack of basic financial understanding leads to unproductive investment decisions. Another myth is that financial literacy is more important for adults. We can achieve the desired results from financial literacy only when we start educating our children. Like many other provocative topics, money is something that kids hear about outside homes as well, which exposes them to wrong perceptions. Financial regulators in India, Reserve Bank of India, Securities and Exchange Board of India, Insurance Regulatory and Development Authority of India, and Pension Fund Regulatory and Development Authority have created a joint charter called National Strategy for Financial Education, detailing initiatives taken by them and also the other market participants like banks, stock exchanges, broking houses, mutual funds, and insurers. What is required is a joint effort by all the banking, financial services and insurance companies as well as to be able to achieve noticeable changes in the perceptions that an average Indian has about financial management. It's time to bring individual efforts under one framework to ensure better outcomes. In this regard, it is important to know that empirical evidence points to the fact that digital efforts like video clips, short films and interactive quizzes on financial education have had a far greater impact than traditional medium. Digital fluency is expected to increase with government initiatives such as Digital India. The recent exercise of demonetization should help bring many more people into the organized sector, thereby opening up possibilities for financial inclusion and literacy. While 53% of Indians had bank accounts against 79% in China till 2014, the gap has narrowed significantly after the launch of Pradhan Mantri Jan Dhan Yojana, which has led to over 280 million new accounts being added to the financial system. The launch of digital wallets, universal payments interface, and new age commercial and payment banks have paved new ways for less cash in the economy. According to RBI, the total number of digital transactions has grown from 419 million in November 2016 to 692 million in March 2017. But there is still huge scope. The push to increase usage of mobile for payments is significant, as India is already the world's second biggest smartphone market with over 220 million smartphone users. Mobile internet users in India total 350 million and are expected to grow 50 million every year till 2020. These numbers create enormous possibilities to go digital and create new opportunities to engage and share financial knowledge with consumers. Financial literacy and financial stability are two aspects of an efficient economy. Financial literacy enhances individuals' ability to ensure economic security for their families. In India, on one hand, there is a need to reach out to lower income groups and economically weaker sections, and on the other, to millennials who are hyper connected and require tailor-made financial products but have limited awareness of the possible financial solutions. The millennials are economically more active compared to their predecessors, but are also made more fragile in dealing with personal finances. The bottom line, therefore, is that Me Too approach to financial literacy will not work in India. All stakeholders, including consumers, must work in conjunction for financial literacy through a combination of innovative strategies. Thank you.